Hello traders, welcome to another daily analysis. Today is November 14th, Monday. I hope you guys all had a great weekend, and after last week's basically these roller coaster events of US election, now things start to calm down a bit. We start the week, of course, Monday is very light on economic data, but generally speaking, it's still quite a sentimental trade that everything still follow the sentiment and the news. And of course, no surprise right now, the dominant currency is still the US dollar, and everything is still looking well. The equity market are all still turning. Actually, the equity market was green in the European sector, but it turned a little bit red mix in the in the American sectors. So it's really, honestly, like I said, sentiment play. The only thing you need to be cautious is really to know how long is this thing going to last, because there's really no fundamental base. It's just a sentiment, right? People are basically speculative of what's going to happen in the future. Now, WTI market finding a support today, but it actually went as low as almost reached $42 per barrel. So just to note that the OPEC meeting is coming up the end of this month, November 30 at Vienna. So that's really going to be a volatile event for the oil market, because really it's depending on whether they are really going to reach agreement to curb the oil output or they are not. Now, as I mentioned, I really have no faith in terms of OPEC member. Not only because they're culturally, geopolitically are so different and conflict in a lot of way, and it happened many times before in history. They couldn't even reach the agreement. So let's see what happened. And even if they reach agreement, we still have to watch out and monitor to see if they follow through with that agreement. Over the weekend, there's a preliminary GDP quarter to quarter from Japan. It was better than expected. Now, it was actually, of course, a very good news, because it was a very large GDP growth. But the Bank of Japan Kuroda actually still came out to cautious the market, saying the GDP component basically mainly from the export from the smartphone parts, and a lot of domestic consumption, which is 60% of their GDP component, is still very low. Private investment is still very low. So Japan is still in this deflationary territory right now. So, since they are going to, already mentioned, a couple of months ago, saying they are targeting the 10-year government bond, really now they just give central bank enough bullet to start the fiscal easing, which I think they are really going to do very soon. So we are not, just don't be surprised to see another round of fiscal easing. Another thing to note is that the Olympics is coming up 2018. So that's going to give a lot of infrastructure spending as well. So just saying that, looking more in the long-term perspective, they do have a big events coming up, and they do need the fiscal spending to boost the economy. And now the 10-year government bond is controlled by BOJ to be targeted near zero. So really, there's no setback or any burden for Japanese government to worry about fiscal easing. They should just go ahead, and they will do it most likely. And other than that, really don't have much news. Chinese data, industrial production was slightly negative, but nothing too major. And the London session, we have PPI data from Swiss franc was actually lower than expected and previous. And again, the negative interest rate of Swiss franc might very well continue, as the central bank keeps saying that they are targeting their interest rate. They are valuing their currency, and they think the currency is always overvalued. And really, that's pretty much about it. And later on, we will have Australians' monetary policy meeting, which the market don't expect too much news or surprise, since they already came out say a lot of things in the last meeting. So tomorrow, and also the ECP, all this thing right now, basically, like I said, we are still very new, just right after the US election, and a lot of basically the whole foreign policy has changed for basically all the countries. So right now, people are still wait and see. Nobody knows what's gonna happen. They have to see what is the new U.S. government, Donald Trump, is going to do. And that will really affect the geopolitical movement, and that will really affect a lot of foreign policy. So right now, it's really on hold. But the market has reacted very positively in terms of the election, and still very positive. We still have a very strong dollar. And also, if you're looking back at European nations, of course, last week I say that I'm very bearish on Euro, and I'm still very bearish on Euro. But it's only because the civil movement, basically, in terms of the, that's why I'm bearish about the currency. If Donald Trump gets elected, then it's really a pro-business attitude, and that's really going to help Britain right now, and also going to help whoever taking the new chancellor for Germany next year and France. And if people are all pro-business, of course, it's all going to be very good for these nations. But it's also going to be very bad for weaker nations. Also going to be very bad for a lot of civil movements, such as the refugees. So that will be the group of people who are going to be sacrificed. But then again, we don't know who is going to be the new leader for Euro, from many European countries. So we have to see what happens right now. Basically, right now there is a conflict. There's a differences between the two largest economic leaders in the world right now. So we'll have to wait and see, basically. But for now, go with the flow, go with the sentiment. The US dollar is very strong. British pound, I'm looking forward to it. I think it's very good. Also, we do have a lot of short sale order into pound, and there's no surprise because pound is hitting at this critical resistance level, and a lot of people are still fundamentally bearish toward British pound, so they still want to short it whenever it goes up. But US dollar is a more certain thing. We'll go over more about that in our technical chart. Tomorrow we have a German preliminary GDP. Now this is very important data, of course. It's not tradable for me per se, because this one itself is not going to affect euro dollar. However, if the sentiment continue and we have a negative German preliminary GDP data, then you can still go ahead to short euro dollar. As I already saying that I'm very bearish toward euro dollar right now. And Australian government speaks, and then you have a CPI data from British pound. Of course, this is going to be important event. Again, back then I'll say this is a good short selling event, but now I'm really very neutral in terms of British pound. So this is an event I'll trade only if there's a surprise. Okay, only if a surprise. Otherwise, I'm not really looking forward to sell British pound or buy British pound. Of course, if the sentiment continue positively, then if we have a positive number, you can buy British pound. Go with the flow. But if you want to trade the news events itself as a risk event, then really trade it only if you have a surprise, which I'll give you right now. So just give me 1 second. Let me take a look at what is the maximum number and the minimum number for the CPI data. So at 4:30 Eastern time, the November 15, we are expecting 0.3, no, actually we are expecting 1.1%. The maximum will be 1.3. So if you see any number that's above 1.3%, you could go ahead and buy British pound. If you see any number that's below 1%, then you can go ahead and sell British pound. So again, the maximum number is 1.3%. The minimum number is 1%. I also have the CPI month-to-month coming out on my data, which you have it here as well. So expecting 0.3%, and the maximum is 0.4, minimum is 0.1. So those are the pretty good data you can trade. So basically, it's gonna be a pound play for the next London session. And again, depending on what is the flow, but again, there's two ways you can trade it. First is to trade on the surprise. Second is to trade with the flow, with the existing sentiment. So if you enter into a London session and the British pound or US dollar is still a risk on sentiment, then you can continue to buy upon good data. So in that case, you don't need a surprise. You just need to go with the flow. Now 5 a.m. of course we have flash GDP data from Euro, and that this is again a good data to take a look whether Euro dollar is really in a weak zone. It's not a tradable data per se. Basically, all the European data itself is not really tradable for me, except it's ECB comment. Otherwise, an interest rate. I understand that because it's really such a big Eurozone, and so individual data is really not important. It's not tradable unless, of course, you have a huge deviations. And inflation report hearing and core retail sale and retail sale. This is a tradable as well, only upon surprise. Again, this is just a short scalping strategy if you want to trade these kind of events. And again, I will give you the data right now. If you want to buy US dollar, you want to see the data coming out and the retail sale. Core retail sale expect 0.5%. You won't see anything that's above 0.8. So anything above 0.8, it's a good buy. Anything below 0.2, it's a sell. In terms of retail sale, anything above 0.7, it's a good buy. Anything below 0.3, it's a good sell. So of course, which one is more important? Of course, core retail is more important because you're excluding a lot of autos and oil prices and things like that. So yes, of course, always favoring core retail, but the bottom line is that you want congruent. So you want these both data to be congruent. You don't need them both to be a surprise, but you need them both to be positive in order to buy and both to be negative in order to sell. And one of them has to be a positive surprise for you to buy and a negative surprise for you to sell. If you have a mixed data, generally speaking, your probability decrease, and I will not trade in that kind of event. Now, GDP price is also tradable. The only things that we don't know when it's going to come out. So the only you can do is going to a Forex Live. If you go to Forex Live and look at the article, they will actually release exactly when the GDP data is going to come out. And there's no expecting number, so you're looking at anything that's above 11.4%. That's give you the best probability. Because if you have something that's 5 and 6, you don't know it's that good or bad, right? It's really hard to tell unless you are really following the GDP price. Otherwise, just looking at anything above this number, then that's a good enough data for you to buy. And if it's below, then it's not necessarily a good data for you to sell. I think unless you see something negative. So if you see something negative, so from a positive 10% to negative, that's a huge gap that you can sell New Zealand dollar. If you see something positive, then double digit, that you can buy New Zealand dollar. Anything in between, I'll just stay out. Retail sale quarter to quarter, there's no timing. I don't know what's this one actually. But it's not in my tradable hour anyway. So I'm basically only going to focus on, this is probably my last tradable event for US dollar. And then Wednesday, of course, you have again climate change, another pound data coming out for you to trade, which I will give you a number tomorrow. And then manufacturer, Canadian dollar, US dollar, all these are actually tradable only, but you need to have a surprise. That's what I'm trying to say. You need to have surprise, but it is tradable. Crude oil inventory, take a look at that because the oil market is very sensitive right now ahead of the OPEC meeting. So this is actually a good indicator to see what's going to happen. But tomorrow you will have API report already, which will give American Petroleum Institute, which will give you an insight of whether the oil inventory is a build or a drawdown. And of course, you have PPI input from New Zealand, Australia, unemployment rate. All these are not a tradable event for me personally, just because it's not in the London station anymore. But generally, the liquidity is very thin in the Asian station, so they tend to stay out because you just don't have enough leverage to make quick peeps in Asian station. For me, at least. Thursday, another retail sale comes from British pound. And then you have a bunch of data coming out from US. Now, this is I really don't like this kind of events, to be honest, because you have so many data coming out, and then most likely you will have a mix. So if you have a mix, it's really pretty much not a tradable event. But if you you need congruent. It's very important. You need congruent results. So either to be positive altogether or negative altogether. But when you have so many data coming out, it's just hard to track all of them at the same time at a very faster speed. But anyway, it's still a good data to focus on, which I'll give you a number on Wednesday. And then finally, you have Chairman Yellen testify 10 a.m. I think this is the first time she speaks after the election. So it's actually important you can pay attention to that. She might give a lot of hint, whether as to December rate hike, and maybe she might comment on the newly president elected or not. But you have to watch out the live news from Bloomberg. And Friday 3:30, another Draghi speaks, and whenever central banks speak, you can always take a look. It's most often than that, it's not an event to trade, but occasionally they will say something which really rattle the market. Finally, we end the week with core CPI and CPI from Canadian dollar. But by this time, you probably already know the direction of the oil market, so we will talk more about that. Okay, so let's take a look at our major currency pair for today. Let's go to our daily chart first. Okay, first thing first, let's take a look at our Aussie Newsy trade. So we are still in this trade as usual. We have set our stop loss to break even. Today, as another green candle for us, we hit as high as 1.0659. But just to watch out that we still hasn't been able to close above the 200-day exponential moving average. So don't be surprised to see some reversal tomorrow. And if the reversal is strong enough, it might stop us out, which I'm perfectly fine. Otherwise, we're looking forward to see a little bit retrace and continue to surge. Now, there was an earthquake happen in New Zealand, but again, not a big event. Only, I think, 2 people died, and really not. They are responding fairly quickly. So, really not. I shouldn't say not a big event. I might apologize. Of course, it's a big event. I'm saying it's not a big effect for the financial market as far as now. So really, it's not anything that need to take consideration in terms of trading. Of course, hope people are fine there. So Aussie Newsy, I'm still holding this trade, not moving my stop loss, just wanting to see. I'm expecting to see a little bit retrace, and of course, now at 7 o'clock right now. If the monetary minute from Australian is very negative, of course, we might see the retracement very, very soon. Otherwise, we have more New Zealand data coming out from this week, which might play into this trade. But since we are already in break-even, so of course, we are less nervous about it at this point. So let's take a look at Euro. So first, Euro Pound is another down day. But you can tell that the momentum has lost already, right? So don't be surprised to see a rebound from Euro Pound today. But generally speaking, a very good pair to still too short. But we have to see what happened to the Pound data this week to see. Now Euro Swiss, again, just taking a look at that, you see that Euro Dollar, another huge drop from Euro Dollar. So Euro is really looking bearish. The only thing you need to cautious right now is that don't enter right now because it's been down for many days. You are looking for a rebound very soon. So you are looking for a support area. EuroCAD, another down day. Very surprising. I'm very bearish on Canadian, but Euro Dollar is just really not going anywhere. Euro Newsy. Again, it's all very similar picture at this point. Euro Yen is up, so just telling you that the risk on sentiment really dragged the Japanese yen down, regardless of their good GDP data for over the weekend. British Pound, we are still same picture. You have a large buying power, and then now the momentum has stopped. You are in this critical resistance area, so don't be surprised to see a retracement. But again, I would never just automatically think the thing's going to retrace just because of resistance. It's really depend on the data driven. So again, today you have CPI data from British Pound. That's going to affect where British Pound is going to go. Now, whether I'm going to trade it as a daily or a long term? Most likely not. And the reason is because I have more British pound data coming out. So all this is like uncertainty for me to hold British pound trade. So I'm not going to hold any pound trade, but I'm going to trade it intraday as a risk event. Pound dollar cable, as you can tell that, this is the only currency that British pound lost to is the US dollar. And of course, again, we are at this very critical resistance. Some people like this kind of candlestick pattern. They call it, three soldiers or things like that. But again, I'm always not really. It's more about the position of candle. If you look at it, it's still at a very strong resistance trend line. So this thing might very well keep going up. Who says it's gonna go down? Nobody. You really have to look at a global picture to see. Cable, pound Aussie. We have a red candle today again. Nothing like right now. Pound Aussie actually is not a bad pair to short, but I have to wait to see what's the monetary minute from Australia first, and then also not a good candlestick signal for me. But again, I don't want to enter any British pound trade just because we have a risk events coming up. So generally speaking, every risk event is as it says, it's a risk event. So it's risky. It's risky for me to hold trade if there is important risk event. So I'm pretty much not going to enter any pound trade, just because so many British pound data coming out. But if the data, maybe after Friday or on Friday and Thursday, then I am able to enter it. But of course, that time we have to reassess the market, reanalyze the market again. Pound CAD, again, it's very similar pattern altogether. And you have pound Newsy. So pound Newsy, again, everything about British pound is all up against a resistance. Pound yen keep going up, no surprise. And Swiss yen probably up there as well. Yep. So again, like I said, Japanese yen is very bearish at this moment, regardless of the good data. I just can tell that doesn't matter what kinds of GDP they have. Really, people are basically priced in, already knowing that they are going to have a fiscal easing. On top of that, there's no risk events right now. The market, the global market, the biggest scary events has already passed last week on the presidential election. So right now the world is, you can say it's pretty peaceful in terms of financial markets perspective. So really no point to buy any safe haven currency at this moment. Dollar CAD, continue edge higher, and I'm really not surprised to see this thing keep going higher. If this month's OPEC meeting fail again, then really don't be surprised to see oil market drop, and you keep seeing dollar CAD keep going up. Let's take a look at dollar yen. Huge breakout above the 200-day moving average, and it also give us a very solid green candle. So right now, a very strong power momentum into the US dollar. Whether this is going to continue, if you just trade by pattern looking at the price action, yeah, people are really looking for, and you have to look at the big picture. You are still at very, very low level in terms of dollar yen, right? Dollar yen, you see the high is like 2015. You actually go as high as 126. So right now you are basically just cross over the 200-day moving average. So of course you are still in a very relatively low position to buy. Now, whether I'm going to buy it, no, because generally speaking, I don't like to buy at high. I like to give myself really a lot of room to go. I don't like to buy high, sell. I don't like to buy high and sell low. Okay, that's just for me. You can definitely do a breakout trade, but for me, I don't like to do that. Aussie Swiss, again, update for all the risk on sentiment currency pairs. So it's very good. Now, it's actually a good signal. I'm not going to lie. It's a very good candlestick signal. But I don't have enough up. Actually, I do have enough upside. So I'm looking, actually, it's not a bad pair. Because you are still at a relatively low position. A lot of room to go. So, yeah, I'm actually not a bad place to long this one. I know if you're looking at this, you know that there's a lot of resistant area coming up. But just by looking at this, actually not a bad pair to long because of the fundamental data and because of the sentiment. But I will do more analysis later on. The only thing is that I'm already in one Australian dollars pair. Normally I wouldn't over leverage, but I'm already set to break even. So basically I am in a leisure to take more Aussie trade at this moment. Aussie US dollar again at this very touching a very strong 200-day EMA support. Now whether it's going to rebound, am I going to buy Australian dollar against US dollar? Not really, because I really don't want to sell US dollar at this point. So let's take a look at other things. Aussie CAD is something I'm really eyeing about because I'm really want to sell Canadian dollar. But right now it's just, again, not a good position. It's good candlestick, but not a good position. Unless you draw a trend line. You know, I was hoping it can go lower than that. So not a good position, not a good candle for me to enter. I wanted to edge lower before I enter it. So Aussie CAD, Aussie New Zealand, which I'm already in, and Aussie Yen. Again, another good pair to long, but I need to have a lower position to buy low, sell high. Again, nothing wrong if you want to get in now. It's just personally my strategy. I really like to buy low, sell high to give myself more edge in terms of a daily trade. Okay, Swiss, update for Canadian dollar, but don't hold your breath. Basically, really absolutely no zero confidence toward Canadian dollar, and nothing to do with Canadian dollar. It's just because the oil market. New Zealand Swiss, New Zealand dollar, New Zealand CAD. New Zealand CAD is actually not bad. Again, if I have to pick, of course, I'm more favored about New Zealand dollar. The only thing is that New Zealand dollar, we do have few data coming out tomorrow. So you have this retail data coming out already, and you have GDT price, and also you have the earthquake events right now. So you have PPI again. So it's too much rich events coming out, which are important enough to change the direction of New Zealand dollar. So in that kind of time, I'd really most likely to stay out. But I'll take a look at it later on just to see if the risk and reward is good enough. Now, finally, New Zealand yen, again, nothing particular for me to take a trade. Okay, guys, that's pretty much it. So in terms of what's going to happen to the financial market, we are almost at the year end, the end of November, mid-November, December is coming up. So biggest events, of course, the Italian election, the referendum. There is a Federal Reserve December rate hike. And generally speaking, just really, I would suggest you pay attention to the news, especially now. Really pay attention to what happened to the U.S. sentiment and how the world react to it. Other than that, I will come back tomorrow to give you another daily analysis. And stay tuned for my website if you want to know if I take any trade I just mentioned. And then if you have any question, feel free to comment below. I will see you tomorrow. Have a great trading week. Thank you very much, guys. Bye-bye.